Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're discussing the two multi-billion-dollar revenue floodgates that Tesla has just opened. When it comes to Tesla, there's two kinds of people. There's those who think they understand Tesla, and there's those who actually do. The former believe that Tesla is an automotive manufacturer, they just make cars and that's pretty much all there is to the story. And the latter understand that Tesla is much more than that. In this video, we're going to be diving into an example of why Tesla is anything but an automotive manufacturer and looking at two incredible ongoing recurring revenue streams that will allow Tesla to literally print billions of dollars in their sleep automatically. Over time, as Tesla transitions more towards a company that receives recurring ongoing revenue, the valuation of the company and therefore Tesla's stock price, in my opinion, will continue to climb. So let's get into the video. If you love crypto, stocks and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it. So, what are the two multi-billion-dollar recurring revenue streams we're discussing in today's video? The first, many of you have probably already guessed, is a recently announced and released full self-driving subscription model. The second may come as a little bit more of a surprise to many viewers, and that is Tesla has officially announced that they will soon, in the future, be opening their supercharging network to other automakers worldwide. So first of all, let's start with the opening of Tesla's supercharging network. Tesla's announcement that they intend on opening their supercharging network to other electric vehicles globally shouldn't come as a shock to long-term Tesla shareholders. In fact, Elon Musk has repeatedly said in the past the offer's been on the table for years. It's just no automakers have actually wanted to take Tesla up on the offer. There's probably one or two reasons for this. One, they were too stupid to realize how important this was, and two, they weren't actually selling any electric vehicles, so what's the point of partnering with Tesla for their own network when you don't actually have any EVs on the market in the first place? We already know that Tesla is literally years ahead of the so-called competition on literally everything that matters, whether we're talking about software, their autonomous approach, their manufacturing techniques, their insights and data collected around thermally managing batteries in electric vehicles, the list goes on. This also extends to Tesla's supercharging network. Tesla had the brains, the balls, and the insight to realize that literally everybody in the future would be driving electric vehicles. Therefore, they did things like in 2014 announce the Gigafactory, whose end output at the time of announcement would produce more lithium-ion batteries than the rest of the global output combined. Yeah. Tesla kind of looking into the future, everybody else looking into next quarter. Tesla has been building, scaling up, and upgrading their supercharging network for years, while other automakers have been pointing and going, why are they even building electric vehicles? Nobody wants electric vehicles. And now suddenly, the penny has dropped. Legacy automakers are shitting their pants and scrambling to move as fast as they can towards electrifying their entire fleets, realizing they will be out of business by the end of the decade if they don't at least try. And spoiler alert, most of them are going bankrupt anyway. It's already too late. But hey, let's not rain on their parade just yet. These foolish, poorly led companies now no longer have the luxury of time nor the capital required to actually build out their own comparable supercharging networks to support their own fleet of electric vehicles. They literally have no choice but to partner with Tesla if they want even the slightest chance of surviving the decade. Were Tesla not an ethical, moral company, Tesla could take great advantage of this situation and exploit these automakers for every dollar they're worth. Of course, this isn't in line with Tesla's mission, nor its culture. Tesla's mission, after all, to accelerate the world's transition to sustainable energy. helping other automakers like open sourcing their patents in 2014 and agreeing not to sue anybody using them in good faith to build their own electric vehicles is just one example. And another is Tesla doing the right thing here and assisting other automakers in utilizing their own supercharging network, so at least they might have a hope of building some electric vehicles before they inevitably go bankrupt anyway. Here we are over on Twitter, the tweet that started it all. I'm just going to scroll down to the relevant part. Feel free to pause if you want to read the whole exchange. From Elon Musk. That said, we're making our supercharger network open to other EVs later this year. Aaron follows up asking, will it be open to other EVs in all countries or just specific ones? Elon Musk replies, over time, all countries. Now I know already there's going to be a few whiny little bitches that have a cry in the corner. Oh my god, I'm going to have to wait longer to supercharge. Fuck that, why would you do this, Tesla? Fuck you, Tesla. Fuck you, Elon, I hate you. Well, there's a few things to address here. First of all, why don't you just sell your Tesla and buy something else then? Whatever, get over it. Second of all, this may not actually be the case. Now, yes, admittedly, this could be an issue, but let's think about this a little bit more. If Tesla allows other customers to charge on their supercharging network, you know what Tesla can do? They can charge non-Tesla customers slightly higher amount than Tesla customers and use that additional revenue to, wait for it, ready? Are you ready for this one? Build more supercharging stalls and supercharging stations. Now, there is always the possibility that Tesla screws this up. After all, there are some supercharging stations right now that are way too busy during peak times. But here's the thing. Tesla know what they're doing. They're fairly smart. They're fairly competent. There may be a few bumps along the road, but Tesla aren't stupid. If they're opening their supercharging network to other automakers, they will understand that it's not only Tesla volume, Tesla production, Tesla electric vehicles that will be charging there, but others as well, and will continue building out their supercharging networks accordingly. So, the idea that Tesla can charge a little bit extra to non-Tesla customers for using their supercharging network is one of the multi-billion-dollar revenue streams we're discussing in this video. But before we look at the numbers in detail, I just want to add a final point. Most customers who own Teslas don't do most of their charging at supercharging stations. Just for the record, they tend to charge at home, occasionally at the workplace. A lot of people have this misperception, especially if they don't own a Tesla, that the only place you can charge is at a supercharger. It's generally speaking just on road trips that people are doing supercharging. So let's do some really rough ballpark numbers here. I'm just going to pull these numbers out of my ass. Feel free to use your own, whatever makes sense to you. I'm also not interested in what's happening in 2022, 25. I'm talking about 2030 and beyond. I personally believe, in a best case scenario, the global electric vehicle fleet, which by the way today is already around 10 million, and remember, it's growing exponentially, could be around 420 million vehicles toward the end of this decade, give or take a few years. And here's how we get to that number. My modeling suggests that Tesla's total fleet, just Tesla's fleet, is going to be well over 100 million vehicles around 2031 in 10 years' time. We've got production volume of close to 20 million by 2030, ramping exponentially between now and then. So Tesla alone accounting for around 1/4 or more of the global electric fleet. I'm assuming that they maintain around a 25% global market share, meaning 3/4 of the market, electric vehicles taken up by other automotive manufacturers. I actually think this may be a little bit bearish, maybe closer to 1/3 of the entire fleet, but hey, let's roll with 25%. Now, we also have to think, out of all the kilowatt hours of charging done by each of these electric vehicles, how many of these will occur at superchargers versus at home or work? I'm going to use an assumption of around 25% of the miles, considering that most trips are just going to be commuting to and from work, etc. But long distance travel is where a lot of miles are actually driven. Even though long distance trips may account for 5, 6, 8, 10% of total trips taken on average, I don't know, pulling these numbers out of my ass, they account for many more of the actual total miles driven per average trip. I'm also going to assume, I believe conservatively, that only 50% of electric vehicles on the planet are using Tesla's supercharging network in the future, meaning that 50% of the electric vehicles are using other networks. I'm not really sure why they would be doing that, but hey, let's use this number as well. Nice and simple. So we've got 25% of the miles driven by half of the electric vehicles in 2030 being charged on Tesla's supercharging network. Now, very roughly, the average number of miles driven per year in the United States, around 12,000 miles, and the average cost to charge an electric vehicle for that entire year, approximately $400. Okay, so let's do the numbers. First of all, we assume $400 per year of charging costs for the average electric vehicle on Earth, but only 1/4 of those charged at a supercharger. That's basically $100 worth of supercharging per vehicle. Now we multiply that out by the global fleet, 420 million electric vehicles around the end of the decade, and we assume just half of those vehicles using Tesla's supercharging network. That brings us to $21 billion of supercharging revenue from Tesla's network, including Tesla and non-Tesla vehicles charging at their superchargers. Of course, the other variable we need to take into account is how many of these vehicles charging on Tesla's supercharger network aren't Tesla electric vehicles. And per my earlier assumptions, we're going to assume that this figure is 75%, 3/4. which means around $15.75 billion of revenue from non-Tesla vehicles charging through Tesla's Supercharging network per year. Now here's where things get interesting. Let's assume that Tesla charges these non-Tesla vehicles a mere 10% extra, 10% more than Tesla customers to use their charging network. This is a minimal amount. If that's the case, all we need to do is multiply this by 10%, and we're talking around $1.5 billion of pure profit from non-Tesla vehicles charging on Tesla's Supercharging network per year. What if Tesla instead decided to charge a whopping 25%? Now, I'm not suggesting this is what will happen, but just out of interest, we're looking at close to $4 billion per year of money out of thin air. Of course, I'm just trying to illustrate a point here. Feel free to plug in your own numbers to those variables and see what they spit out. Just trying to make the point. This is a huge potential revenue and profit opportunity for Tesla over the long term, and I don't see many automotive manufacturers having any other choice than but to use Tesla's network if they want their customers to have the best coverage in terms of charging. Now, before we move on and talk about the staggering potential of full self-driving subscription revenue, which is going to dwarf anything supercharging revenue could ever dream of bringing to Tesla's coffers, I just want to talk about a few more points relating to supercharging. Feel free to play along at home with me on this one. Question: does Tesla produce solar panels that can generate energy using sunlight? The answer: yes. Does Tesla also produce batteries that can store energy generated from solar, wind, hydro, or any other form, and even pull energy off the grid during off-peak times when energy is at its cheapest and store for later dispatch when energy expenses are higher? The answer to that also yes. I think you guys can see where I'm going with this. At some point in the future, it's likely that Tesla will be generating some, then potentially most of the energy for their supercharging network renewably, sustainably, and for practically zero marginal cost. Now, yes, there's some capital expenses along the way, but again, long-term investor, long-term vision, think out into the distant future. Why wouldn't Tesla be using solar and or batteries in combination with their supercharging network to lower their overall energy costs to help customers charge for less and or increase their margins on the supercharging network? And just two final points. I think I first heard these over on Now You Know. Shout out to Zach and Jesse, love those guys. Very funny content. So here's a question. What if, while a customer who doesn't happen to own a Tesla is charging on Tesla's network, Tesla could be telling them, hey, if you happen to own a Tesla, you'd be saving X amount of dollars while charging your vehicle. Because, as I mentioned, Tesla could be charging more for non-Tesla vehicles. Yeah, cool, maybe, whatever, big deal. But here's an even more interesting thing to consider. At this point in time, in order to charge on Tesla's supercharging network, you need the Tesla app installed on your phone. You don't put your credit card in when you charge. What a waste of time. It automatically syncs up to your app, your vehicle, recognizes the vehicle, and charges your card automatically. What if, as a condition of using Tesla's supercharging network, customers need to download a Tesla charging app? I'm serious, just imagine that. Imagine if that's the way that this works. This is actually important. This may give Tesla an avenue to market to other potential customers, not just for their vehicles, but also for their solar, battery, and in the future, HVAC and other products as well. The possibilities here are endless. And now, let's move on to the main course, full self-driving subscription revenue. Here we are over on the Tesla website. Subscription pricing, basic autopilot to full self-driving capability, $199 per month. Enhanced autopilot to full self-driving capability, $99 per month. At this point in time, enhanced autopilot is only available in certain markets, but obviously in the future, this is going to be available everywhere. So we're just going to focus on the $199 per month price. And by the way, a hilarious side note, I don't know if this is a coincidence or not. You guys can let me know in the comments below. So most of you folks will know to buy the full self-driving software package outright today costs $10,000. So let's look at the payback period from the subscription cost. $199 per month times 12 months. Roughly $1/4 per year. So let's multiply that out by 4 years. Close to 10,000. So we're at 4 years at this point in time. Let's add a single additional month. See where we get to. $199. Getting very close. That's 4 years and 1 month. Add one more month here now, $199 again, and we've pretty much paid back the software package in, wait for it, 4 years and 2 months. Shout out to 420. I mean, was this a coincidence? Please let me know in the comments below. Okay, full self-driving subscription revenue numbers. Guys, make sure you're sitting down for these. Once again, we're going to go out about a decade. I assume that Tesla's fleet at that time in my bear case is around 111 million vehicles, but we're going to round that down to 100 million vehicles. Again, use your own numbers, just trying to illustrate the point. Now, at this point in time, 10 years from now, I personally believe that Tesla's full self-driving software is going to be beyond superhuman. We're not talking 10, 100 times safer than human drivers. We're talking 1,000, 10,000 times safer or more. At that point in time, it may actually become illegal for human drivers to even operate vehicles, but we're not going to go that far there. I also suspect that pretty much 100% of Teslas in the future will be operating on their full self-driving technology, but I'm going to be ultra conservative in these projections because why not? I'm going to assume that just 69% of Teslas have the full self-driving subscription at that point in time. Let's do the numbers. So 100 million Tesla vehicles, 69% of them subscribe to the full self-driving software. Now, of course, you may argue this will be higher or lower. If you think it's any lower than this, you might want to get your head checked. Maybe you think potentially a lot of people are buying the software package outright at that point in time. That's possible. Keep in mind that the cost of each Tesla vehicle over time is going to decrease quite dramatically. By this stage, the average selling price of a Tesla vehicle, the actual hardware, might only be $18,000, $20,000, which would mean that the software package at that point in time could equate to half the cost or more of the entire vehicle. There may be many more people interested in subscribing to the software rather than buying it outright. In either case, I'm just trying to illustrate the point, so you're welcome to use your own numbers. That brings us to 69 million Tesla vehicles subscribed to full self-driving software in about a decade's time. Each of those, per month, paying $199, assuming the software price doesn't go up. It probably will, but let's just assume that it doesn't go up. There's also the argument that maybe it becomes commoditized and dramatically falls. Maybe that's true as well, but if that's the case, there's also the possibility that other automakers, much like needing to use Tesla's Supercharging Network, will need to use Tesla's autonomous software because it's so much safer, no point trying to develop their own, in which case these numbers could be astronomically higher than we're actually talking about. So, let's have a look at how much we're talking about per month of practically pure profit, because remember, this is software. Tesla needs to press a button to deploy it to a vehicle. They don't need to build anything more. It's already available, blah, blah, blah. At $199 per month, we're talking about $13 billion, almost $14 billion of pure profit per month in a decade's time. Multiply that out by a year, and we're talking about $164 billion of practically pure profit per year from Tesla's full self-driving software subscription. What the actual fuck? Alright, so I'll give you guys and girls a moment to pick your jaw up from the floor. Now, you guys might recall the bull case, the supercharging numbers earlier, 25% extra for non-Tesla customers. I've just noticed something. Let's add these two figures together. So we've got $164,772 million per year of full self-driving subscription revenue in about a decade's time. Plus in the bull case, the supercharging revenue. And we've ended up with approximately $169 billion of practically pure profit revenue to Tesla in about a decade's time. Oh man, what are the odds? This is a strange simulation. That was literally a total accident. Anyway, let's move on. So, forget every other potential revenue and profit stream for Tesla. Forget Tesla insurance. Forget automotive sales. Forget home batteries. Forget solar. Forget grid scale batteries. Forget their energy software. Forget Tesla Dojo as a service and other AI services. Forget HVAC. Forget everything. If we just focus on Tesla's full self-driving autonomous subscription revenue in the future, which once again I reiterate is almost pure profit. We are talking about a company that just through one single revenue stream could be generating close to $200 billion per year straight to the bottom line. There isn't a company on earth today doing these numbers. Now, I'm sure there's two camps of people watching right now. Some of you thinking, Stephen, you are way too high, man. There's no way that Tesla's going to get close to that. You really think they're going to make 20 million vehicles by the end of the decade and have a fleet of 100 million vehicles? You're insane. Okay, that's cool. Cut my numbers by whatever you need to. Cut them in half. Cut them in a third, a quarter, a tenth. I don't really mind. You still see the implications here are ridiculous. And as crazy as it might sound to some, I'm sure there's plenty of you who actually think I'm quite bearish in these predictions as well. After all, I assume only 69% of Teslas in the future are actually subscribed to full self-driving. Like I said, I think this is going to be close to 100%. It may even be illegal for humans to drive vehicles at that point in time because they're so dangerous. And I've also assumed just $199 per month, not including anything additional for enhanced autopilot, and also assuming that the price of this software doesn't increase whatsoever despite its utility dramatically increasing over time and enabling autonomous robotaxis to print money for their owners while they're asleep. There is every possibility, as insane as it sounds, that this monthly subscription price may be much higher than we're talking about today, and that the take rate may be much higher than people anticipate, close to 100%, in which case the numbers here are so ridiculous I couldn't even bring myself to discuss them. In either case, It's quite clear that Tesla is anything but an automotive manufacturer, and we're starting to see the early transformation into an ultra high margin, ongoing recurring revenue company, which is going to send Tesla's stock price, their valuation, to the moon, in my opinion. Elon Musk's tweets that Tesla is now going to be opening their supercharging network globally to other automakers over time is a great example of their hardware first mover advantage, their vision, and their foresight. Nobody else even realized that EVs would be a thing, let alone the dominant form of transport in the future. Tesla has succeeded in accelerating the world's transition to sustainable energy, in particular electric vehicles. And as a result of that, having the balls, the brains, and the insight to build out their supercharging network, they have the dominant network on planet Earth, and it makes literally zero sense for anyone else attempting to compete with Tesla by producing their own electric vehicles to even bother investing in their own charging infrastructure when they can just use Tesla's network instead. They have little other choice. And Tesla's full self-driving technology is going to be the software equivalent of Tesla's supercharging network. No one is catching up to them, and it doesn't even make sense to try. My prediction is that in the future, when Tesla has the evidence to present to regulators that their full self-driving software is 10, 100, 1,000 times safer than human drivers, and everyone else is scrambling to even get on par with human drivers, at some point, every other company attempting to solve autonomy just throws their hands up in the air and says, you know what, fuck it. Let's just license this software from Tesla. There's no point wasting time. They have an unassailable lead. Let's just get this technology. Let's use this in our own vehicles and pay a licensing fee because we don't want to have blood on our hands for killing hundreds of thousands, millions of people per year unnecessarily in preventable road accidents. I simply don't see this playing out any other way, and the implications here are staggering. If it's not only Tesla customers subscribe to full self-driving software, but customers in other electric vehicles as well, holy shit. Now, I just briefly want to address the skeptics here. I'm sure there's a few of you thinking, Stephen, how can you so arrogantly assume that Tesla's always going to maintain a lead in terms of the safety of their autonomous software? I'll explain to you in the simplest terms possible. Tesla has more vehicles on roads today collecting data, and they will have more vehicles on the roads in the future also collecting data. They also have the world's leading computer vision expert and the best software engineers in the world. The only way anyone catches Tesla is to get a time machine, go back in time 5 years, start covering their vehicles in sensors, and then build as many vehicles as Tesla is every single year between now and then build more vehicles than Tesla is every year from now into the future. Not going to happen. Never mind the fact that they'd have to poach Andre Karpathy and all of Tesla's software engineers along the way. Now, I admit that other companies could actually improve their autonomous software as well, at some point surpassing human safety and continuing well on beyond that. But here's the thing we need to consider. The gap between where Tesla is at any point in time and where the next best autonomous software is a gaping chasm. Maybe you think to yourself, well, who cares? If one company's got software that's 10 times safer than a human and Tesla's 100 times safer, who cares? 10 times safer is pretty good. Yes, it is. But I ask you the question, how many typical consumers do you think would feel safe and comfortable to get in a vehicle where there's data proving that they are 10 times more likely to die in a fatal accident than another vehicle? Now, yes, there is some small subset of people that don't really care too much about vehicle safety. They don't really care. That's fine. There's people that ride motorcycles, even though the odds of dying on a motorcycle are pretty damn fucking high if you have an accident. The point is, a typical consumer, especially I think consumers who have families, are unlikely to be willing to take this risk when there's no additional economic cost. Let me come at this from a slightly different angle. How many people today can you think of who voluntarily get in cars, driving at high speeds, who don't buckle their seatbelts? Yes, there is a subset of morons out there that are trying to perpetuate natural selection by not buckling up, but most people understand that it's probably a good idea to buckle their belt to be safer overall. So, let me drive this point home. Get it? Drive, because my life. So here's some interesting research on restraint use and its effectiveness. Research has shown that seatbelts, when used, reduce the risk of fatal injury to front seat occupants, age 5 and older, of passenger cars by 45%. And the risk of moderate to critical injury by 50%. In other words, wearing a seatbelt, you're about half as likely to be injured or killed in an accident. Imagine that Tesla's full self-driving software is just twice as safe as number 2. And by the way, it's going to be way safer than that. But hey, let's just assume there's a tiny gap and it's just twice as safe. It's equivalent to wearing a seatbelt versus not wearing a seatbelt. Now, what if instead of being twice as safe, it's 20 times as safe or 200 times as safe? I rest my case. Now, I suppose there's a few of you thinking right now, come on, man, there's no way it's going to be twice as safe, let alone 10, 20, 30, 100 times safer than number 2. To you, I say, might be a good idea to start doing some homework to try to understand how neural networks and deep learning actually work. Get back to me after that. And I'd love to know what you guys think in the comments below. First of all, you think it's a good idea? Are you in support of Tesla opening their Supercharging network to other electric vehicle makers? And second of all, what are your assumptions for Tesla's full self-driving revenue in 10 years' time? Let me know how many vehicles, are they licensing to others, what are they charging per month? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.